Right now, we're sitting on the verge of yet another Bitcoin hype cycle, something a lot of people like to call the banana zone. This is a short window of time where the majority of Bitcoin's gains have happened in the past, and the price doesn't just move along slowly, it starts to move vertically.
The whole Bitcoin market is about $1 billion. It's a novelty for the geek squad.
Bitcoin hit an all-time high, almost reaching $20,000.
Let's talk rocket ships. First, Bitcoin. That falls into that category because that's what that is. 39,000.
Another record high for Bitcoin this morning, now up over that 50,000 mark, up more than 60% since the beginning of the year.
Bitcoin this morning hitting a new high above $123,000.
I think it's going to surge through the roof, and then it's going to surge to 180 and crash to 140, and people will be freaking out about it again.
So in today's video, I want to talk about why this pattern keeps repeating, and I want to show you what charts and data you can use to figure out where we're at in the cycle as we go. Let me start with the fundamentals. So every Bitcoin cycle starts with a piece of the software code that was put in place going all the way back to 2009. About every 10 minutes, Bitcoin is created and added to the supply. But every 4 years, the new supply that gets dropped on the market gets cut in half. So what started in 2009 as 50 Bitcoin got cut to 25, then 12.5, then 6.25. And as of the 2024 halving, it's now 3.125. And by 2028, this will drop again to 1.5625. At its core, it's a supply squeeze built into the software itself. The Bitcoin halving isn't just a technical milestone, it's a holiday celebrated by Bitcoin holders all over the world. Because now, over time, seeing this play out, they tend to know what happens next. All right, so where are we today? Today, we sit at 450 days after the 2024 halving, and the price is up around 85% since then. This puts us right at the precipice of what I believe is another major leg up for Bitcoin. But let's zoom out and compare all the cycles side by side. Same timeline, same starting point, in just different years. The blue line, that's 2012, up over 5,000% in less than 2 years. 2016 is the turquoise line. That one ran over 1,200%. Then 2020, the magenta line still did a 6x despite COVID, the FTX fraud, and the China mining ban that, in my opinion, cut the cycle a little bit short. And now we're here at the orange line, the 2024 cycle. Bitcoin's code has remained unchanged. We have the same software code, the same halving event that happened in 2024, but this time we have a lot more eyes looking at Bitcoin. Everybody in the world has the ability to look up this data online and look at what's happened in prior halving cycles, but most people won't realize it until it's too late and the price starts moving up aggressively. This reminds me of something called Cassandra's curse. It's a story in Greek mythology where she could see the future, but no one believed her. This is sometimes how it feels tracking prior Bitcoin cycles and mapping where we are today. So let me show you why this keeps happening and why it matters now. While the first step of the bull run is driven by the supply side part of the story, the next leg is driven by demand. George Soros is a hedge fund billionaire made famous for shorting the pound in a speculative attack against the Bank of England. And he coined the idea of the theory of reflexivity. At its core, Soros's theory of reflexivity says that markets aren't just driven by fundamentals, they're driven by people's beliefs about the fundamentals. And when those beliefs change how people behave, they actually start to change the underlying fundamentals themselves. This creates a feedback loop where perception becomes reality, and Bitcoin is one of the purest examples of that. During the parabola phase of the cycle, Bitcoin is a fire, and attention is the oxygen. As price goes up, attention grows. As attention grows, demand increases. As demand increases, price goes up again. This is how you get parabolic moves, and that's why the cycle doesn't just rise slowly, it starts to accelerate. All right, so where is all of this demand coming from? In 2025, it's not just tech enthusiasts and cypherpunks anymore. Wall Street is officially here, and they're not just dipping their toes in. BlackRock's Bitcoin ETF, IBIT, is now the most successful product launch in the company's history. It hit 80 billion in assets under management in just 374 days. This is 5 times faster than the previous record holder, Vanguard's S&P 500 ETF. BlackRock, Fidelity, and other major brokerage houses are officially recommending a 1 to 3% allocation into Bitcoin for their clients. This may sound small at first, but out of trillions of assets, even a small piece of that creates massive new demand. The US Bitcoin ETFs have bought over $140 billion worth of Bitcoin. Institutional demand is here, and it's coming from everywhere. Financial advisors, hedge funds, pensions, even real estate firms are now allocating. On top of all this, we have public and private companies like MicroStrategy, MetaPlanet, Tesla, and GameStop leveraging traditional financial markets to allocate to Bitcoin. They're also using things like convertible bonds and preferred stock to raise capital and then using that capital to allocate to Bitcoin and stack it on their balance sheet. These are traditional capital markets now being leveraged as a pipeline to accumulate a digitally scarce asset. And all this demand isn't coming from savings accounts, it's coming out of the $300 trillion bond market, real estate, and equity market that's been underperforming for years. Bitcoin demand isn't just fringe anymore, it's made it to Wall Street and it's being reallocated into this new asset class. Combined, corporations and institutions now hold over 1 million Bitcoin. Wall Street isn't just entering the market, they're leading it. And if you combine all this new demand with Bitcoin's fixed supply, you start to understand that the reflexive feedback loop is alive and well. Higher prices actually attract more inflows, and more inflows lead to higher prices. Are we finally here? Are we at the point where Bitcoin cycles are over? While the source of all the new demand has changed and it's not retail anymore, these hedge funds, brokerage firms, and financial advisors are all just people like you and me. And no matter how much capital all these people manage, they're not immune to human nature, and I don't think that human nature changes. If we look back, greed has always played a major role in the final leg of every parabolic Bitcoin cycle. As the price starts to rise, speculators pile in using things like margin, leverage, and loans, and ignoring basically all risk at the end of the cycle. A lot of people, when they first hear about Bitcoin, they think that using leverage is a time machine to becoming an early Bitcoin holder. All of this can work in a short period of time temporarily until all of a sudden it doesn't. Eventually, towards the end of the banana zone, we hit a breaking point where everything starts to unwind. Margin loans get called and people have to sell Bitcoin to pay down their debt. The feedback loop we talked about earlier switches from positive to negative and everything starts to unwind. This is what leads to every parabolic move up in the end of the Bitcoin bull run. All of the tourists disappear and the drawdowns are brutal. They can be anywhere from 50 to 80%. Most of the speculators leave, but some speculators decide to do the work, study what Bitcoin is, understand what they hold, and they stick around for another cycle. The market will usually bottom around a year from the peak, and then it'll take us around 2 to 3 years for the price to stabilize and we start to build a base and move back up into the next halving. And just like that, the cycle starts all over again. All right, so how can we know exactly where we're at in the cycle as we move along? There are helpful charts and data we can use, but please use all of these with a grain of salt because I don't think that there's anything that gives us a crystal ball into the future of what Bitcoin's price is actually going to do. I'm gonna break down 5 charts that I use to see what Bitcoin holders are doing and where we're at in the cycle as it moves along. The first one is the HODL waves. HODL waves show just how long coins have stayed in untouched wallets. So when you see thick, low set of bands, especially in warmer colors at the bottom like orange and red, that means more coins are moving recently, which often lines up with a rising price as we've seen in the past. In past cycles, big spikes and short-term waves have coincided with market tops as older holders take profits and new buyers FOMO in. So right now we're starting to see a buildup in shorter-term waves again, which could mean that we're entering that frothy part of the cycle known as the banana zone. All right, so next up we have the MVRV Z-score. This compares Bitcoin's market cap, which is the price times the supply, to something called the realized cap. So the realized cap measures the last price each coin moved, giving us a look at what people actually paid for their Bitcoin. So instead of guessing, we can literally see how far above or below fair value the market is trading. When the Z-score enters the red zone at the top, historically this is around 7 to 9, the average investor is deep in profit, and that's where the tops usually start to form. So as of today, we're still rising, but we're well below that historic top zone, suggesting we have some room to run here. Next up, the Mayer multiple tracks how far Bitcoin's price is above its 200-day moving average. When this multiple rises above 2.4, that's historically been a signal we're near the top. So right now, the multiple is hovering around a healthy 1.23 to 1.25, still under that red alert zone, which is another reason why I'm bullish here. Next up is long-term holder supply. This chart shows how much Bitcoin is held by long-term holders, people who haven't moved their coins in months. When the green area is growing, it means that more Bitcoin is being locked away and held with conviction. So in past cycles, long-term holders tend to accumulate during bear markets, and then they started distributing near cycle tops. So right now, long-term holder supply is near an all-time highs, showing that conviction is strong and many coins still remain off the market. This tightening float is part of what can set the stage for sharp moves in an environment where we have increasing demand. Lastly, we have the pi cycle top indicator. This one's classic. It uses two simple moving averages to try to identify major tops in the Bitcoin cycle. So in the past, you can see here it's nailed cycle tops within just a few days, like in 2013, 2017, and then again in 2021. This isn't gospel or magic, but it's surprisingly accurate, and it's a great one to keep an eye on as the market gets hotter. Let me be very clear here that all of these indicators should be used as supplemental tools. They're not foolproof in calling cycle tops. And if we know anything about Bitcoin, it's that Bitcoin has broken all models in the past. But all these can be helpful to kind of gauge where we're at and to avoid chasing hype, or if you get tempted to use leverage, to avoid doing that. The final parabolic move of the Bitcoin cycle is no doubt very exciting, but I think it's important to take a step back and just recognize where we're at in Bitcoin's story and the overall adoption curve. So if you compare Bitcoin to the internet, we're in the late 1990s. Bitcoin is still a relatively small $2 trillion market cap in a sea of $900 trillion of global assets. It all started with cypherpunks, then we had Austrian economists and tech enthusiasts, then early adopters, and now Wall Street is here. As Bitcoin cycles continue and the halving keeps cutting blocks in half, I believe that we'll be joined by global corporations, nation states, and eventually billions of people from all over the world. No matter what happens in the next 6 months, my mindset is long-term. I'm not a short-term trader, and I plan on holding Bitcoin long-term with all of this in mind. At the end of the day, there's only 21 million Bitcoin, and every halving brings us one step closer to the entire world wanting their slice of the pie. The Bitcoin halving clock waits for no one. The supply is going to continue to get squeezed, and demand is only going to grow from here. So buckle up for the next few months. Don't use leverage. Hold on for dear life, because I think Bitcoin is just getting started. Like I said, if you want to track any of the charts I've talked about, they're linked down in the description below. My name is Austin. Thank you so much for watching, and I'll see you in the next video.